Welcome back to this new week on Crypto. My God, the Bitcoin markets are moving up, which is always a little nice deep down inside, but there's some fun updates just kind of happening broadly. I also want to talk about a new app that's launching tomorrow. Let's get into it. Bye. So first and foremost, I've talked a lot about the broken market structure and how I'd like to see the return of the ICO, the initial coin offering. This was really big in 2017, and it's what allowed a lot of early investors in the Ethereum ecosystem to make a lot of their wealth. This was low-valued coin-based companies that issued their tokens. Anyone could get in for some ETH, and they would raise a ton of money and hopefully launch a business that operated. Things like Aave got their jumpstart through this mechanic. Now, it's largely coming back because there is this consistent belief that there is too much value accrual in the private rounds, aka behind closed doors, between the venture capital market and the tokens themselves. You've heard me talk about how these projects are really overinflated in price, which leads the token launches to go down and to the right, which is not good for any retail appetite to come into this industry. It's just a losing money bet, except for the people that got in super, super early. And that's kind of exactly the problem that we try to fix with blockchain. Now, that being said, we have today the announcement of the Plasma ICO on Kobe's Echo. I talked about it in a previous episode. And what's interesting about this is a blockchain layer one built for stablecoins. Stablecoins are all the rage, all the hype. Talked about the Circle IPO and just watching it go to the fucking moon. And what Plasma is basically coming out and saying is like, look, we're going to be core infrastructure for stablecoin payments, movement, settlement, etc. Basically, think of this as a blockchain-based payment infrastructure play, the next great payment layer, whether you want to think of PayPal or Stripe, etc., etc. And there is so much attention on stablecoins right now. Investors are pretty much running around saying, how do I get in on this? But realistically, it's only been through the equity of either Tether, a private company, or Circle, now public, or there's been a few attempts through DeFi coins, but they're simply not seeing the same success. Hopefully those do pick up as we start to realize the importance of having self-custodial money. And of course, stablecoins that share the yield that they generate. The private company model does not do that. Now, that being said, the XPL token is the public sale on the Echo platform, and it came out with quite a bang. So Plasma earlier today opened the offering, and in about 2 minutes, it filled up with $500 million worth of investment capital. That $500 million is comprised of just a little over 1,000 wallets. So it could be more egalitarian. We really want to see the distribution side of the ICOs. You want to know that as many people as possible were able to invest. And the reality, and props to Uttam Singh for the breakdown, goes like this. The deposits went live. The initial cap of $250 million. Boom. First minute, it's over. So they raise that. They double it to $500 million. Again, filled within seconds. I mean, at this point, you have a backlog. So they're probably looking at the desired interest in the whitelist, saying, hey, we can pump this to 500. And basically, you open it, it fills, and it closes. That's how that works. That's how Reg CF works, crowdfunding, etc. So now only 1,108 people got in. That's not really that glorious for such a large number of 500 million. But that being said, the three largest checks coming in, 50 million, 33 million, and 24 million. I mean, this is how offerings run. People look at this and they're like, they're really another way to get VC dollars in. It's just like a round, but it's shaped different. And in reality, that's what public listings are like of a private company. I've worked in crowdfunding for a long time. I mean, you need to know that there's buy-side demand. Who would run one of these campaigns if it's stalled out? Nobody would ever want to buy an asset that stalls in an auction, right? You basically say, there's no demand for this asset. Why would I ever look at this as an investment? So this probably bodes really well for whoever got into this offering, and it's just fun to see an explosive response to a new ICO. That means we're kind of cresting back into a new capital formation model that is uniquely inherent to blockchain, and I'll give it props for that. Now, what I really want to talk about today is a project that full disclosure, I'm personally involved with. I am a private investor. We've been working with the team, myself, back and forth for months to do a variety of iterations and just try to get the fun into this app. And the idea here, it's called Upside, is that they want to let you day trade the internet. And what does that mean? Well, we're really starting with Twitter, starting with X app. And what you can do is let's say you find a banger tweet, Let's say you find a banger tweet, right? What they're trying to do is say, hey, memes, can we upgrade the ecosystem, the markets around memes and everything that is really involved with them, right? Looking at the Pump.Fun model, which was like you could launch a meme coin and it sits there forever on the blockchain with a market that goes up, it often goes down. And like, well, maybe that always on market that like I created a coin and like I'm supposed to defend it forever or turn it into a business, maybe that's a little exhausting and not quite as fun as it could be. So they took the idea, they wrapped it around tweets as the first meme. We will eventually get what looks like Instagram, YouTube, Spotify, TikTok. And basically you find this piece of content, this meme, and you bang it in here at the top. And you can mint this as a market. Now, minting as a market costs about $1, and your asset will go up for public trading. So just for example, the SEC recently came out with the American values of economic liberty, private property rights, and innovation are in the DNA of DeFi. I was like, oh, that's pretty cool. So I just shoved the link to the tweet up here. You pay $1 to mint it, and it goes into a 5-minute auction period. Now, what happens in that auction period, it's like a Sybil resistance sniper bot kind of prevention mechanism, is that at the beginning of that 5 minutes, $1 will get you one upvote or share of the tweet. Now, every 3 seconds, your purchasing power actually increases. So over the course of 5 minutes, it goes from $1 equaling one upvote all the way down to 1 cent equaling one upvote. So, this disincentivizes somebody from, say, launching a tweet, putting $1,000 into it, and again, trying to front run everybody to open it up. There's this time period. If you truly believe that it's going to be amazing, you can pay a higher price. Otherwise, you wait that 5 minutes for it to sort of get into the market and get into the flow. Conversely, on the tail end, it also starts to decrease your purchasing power. So 5 minutes before a round concludes, which is basically when we wrap up and all the prizes are distributed, you have the inverse, right? You go from 1 cent to $1 per upvote. This is a resistance mechanism to not just launch something at the very tail end, fund it like crazy, and try to take from the prediction pool. So let's get into what is the pool? What am I even talking about, right? So the prediction pool goes on once every hour. Basically, this is, a beta right now, so we're not seeing the most activity in here. Over the course of 1 hour, each round, everyone can come in here and they can buy and sell tweets. Obviously, if you buy low, you can sell high. So even in the middle of a round, you can actually make money yourself. However, a lot of the fees are being collected and they're going into this prediction pool. And at the end of the 1 hour, the prediction pool distributes its earnings, its rewards. So this is really the core of it. Like, this is the exciting part. So every hour we get new winners. Now, the tweet that gets the most upvotes in the course of that hour becomes the winner. And that's what the distribution goes to, right? Whoever holds the most of the upvote tokens gets distributed pro rata for whatever amount of money is in that pool. So when that hour comes to an end and everything's divvied up, all the winners are announced, whoever holds the most upvotes that started in that round and ended in that round, they get some of the winnings of the pool. There's also the voters, who you can basically see who are the top voters per round. So in the last round, you can see how everyone distributed earnings. Now, I've been in other rounds with much higher earnings. We've even seen a sniper bot accidentally come in and distribute $1,000 in ETH gas to try to get a vote in here. And suddenly the round was up $1,000, which then got distributed to the winners. So voters do get a pro rata distribution of that pool, depending on how they voted in that round. Curator, I'm not super sure. I actually have to come back to this. And of course, the creator of the tweet. Now, they get paid out. And what's fun is that the tweet stays alive round after round. Of course, it only wins if within the round it goes from, X to X plus 1, X plus 2, and becomes the most dominant one. But let's say the same tweet keeps getting the most upvotes, the creator will continually get the payout. So that's pretty cool. If you pick a meme well and it has longevity, you could see some real returnings. You could see some upside. So with this going on every hour, like, it's pretty fun to get in here and to try to look through these tweets, and you're like, oh, maybe this one, performed really well in the last round. Maybe I'll buy more shares of it. But it's, is it going to perform in the same way it did before? And you can see here, new shares are going on in the activity, right? $100 upvotes. Somebody did a $314 downvote. So they probably bought these shares earlier and they're like, sweet, I'll cash out that $314. And of course, we've got, backers like Arthur Hayes in here with the top gainer of almost $2,000. And just in a nutshell, I think it seems really simple at the top level, which is to take memes, take social media, and just create these unique little micro markets. They last for about an hour, but they also could last longer, and turn it into these round by round battles for attention. Now, I do think it's going to be interesting to see how these things perform in a financial market versus what they do right in an algorithmically based attention market. So it's not necessarily about how much reach they got, how many shares, requotes, retweets, things like that. It's going to be about how participants inside the Upside app treat it. And I think it's so cool because so much of the capital, there's no token to it. We're not speculating on the Upside coin going up. We're able to get in here hour by hour and play the game again and again. And it's really fun because, you know, you can look at it in two ways. One, do I just want a short-term play of like, I'm going to try to trade the hottest tweet in this hour? Or do I want something more long-term, set it and forget it? Like go out into Twitter, into X app and discover the new and exciting mimetic markets and become the creator of these things that live on for a long time. So this all launches tomorrow. We've been really testing it back and forth, battle testing it. The smart contracts went through a very intense audit, and it all launches on June 10th. I do have access codes for anyone that wants one. I put it in my sources. Keep in mind, if you bang that in there, you know, today, June 9th, it won't let you in. This all goes live somewhere between 10 a.m. and 1 p.m. Eastern Standard Time tomorrow on June 10th. But again, get in my sources. I've got the link set up. It's super, super fun. I spent Sunday just being a complete degenerate trading tweets, and I had just a fucking blast. So with that being said, enjoy the market being up. Stay safe out there. Don't overlever, and I'll see you tomorrow.